The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going In Raw, we talk about this week in the market and do our old favorite, Q&A.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent.
Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dukes, and Hugh Honey.
Produced by Vinny Strokes, baby.
This episode is brought to you by Benzinga. Benzinga is our absolute favorite resource to use when we trade. We use it for news scanners. We use it for float checkers. We use it for stocks screening. We use it for just about everything, including chat rooms and much, much more. But that's not all they have. They have YouTube as well. Hot Stocks Luke every single day has great guests on, ranging from Ripster to Mia Khalifa to Gary to all the best guests you need to hear from every single day, all day long. So make sure to go check that out. That's youtube.com/Benzinga. And if you look in the replies to this tweet, you will see how to get a discount code for Benzinga Pro. Make sure to go sign up for Benzinga Pro right now. Welcome back to another episode of Pennies Going In Raw. Today is Sunday, May the 16th, and SPY doing some things. Obviously, you know, even on Wednesday, you saw it go down to 407, 406. Once it broke that 410 market, it just seemed like it was tough from there.
Yeah, for sure. SPY earlier in the week was tough. I mean, it had that kind of like bull trap on, was it Tuesday? Tuesday had that kind of bull trap where everyone was like, okay, like, you know, they were just shaking out the weekends to go to like 450. And then all of a sudden we woke up today. Fuck.
Yeah.
Earlier in the week, SPY was difficult because we kind of had like that bull trap. Tuesday we saw everyone was like, oh, we're shaking out the weekends, blah, blah, before we go to 450. And then Wednesday we woke up and everything was pulled. And the market was just down, almost 2% and just kind of lagging there all of Wednesday.
Yeah. Do you think SPY's action kind of on Tuesday and Wednesday is some of it a result from the United Nations sends out a warning of a potential full-scale war as the death toll rises in the Israel-Hamas situation?
Yeah, so this is kind of like when we talked about algorithms and how I said that market makers sometimes use news headlines to mask, what they're really doing with the market. And this is like one of those instances where I think that's what they're doing. The market's down. The market earlier in the week was, I think, down like 3% overall, when by close on Wednesday. So they kind of use this headline to act like this is a bigger deal and that the market's reacting to that, when in reality, they were just like, this was kind of like a planned thing. If I sound crazy, then go back to our algorithm episode. And that's kind of what I think is that in reality, it's actually, war is actually good for the economy because we're putting people to work. There's money going into the economy. Obviously war is not a good thing, but from an economic standpoint, we're not saying that like the United States is going to like go at World War III, but we could provide some assistance, which would help the economy out. So the way that I look at the market is that the market makers use this opportunity and this headline to to bring the market down a little bit. And I think that what happened earlier in the week for the market is really good and what we needed. So I don't necessarily think that that the market's going down because of that news, but I think that that why we saw the volatility and the fluctuation inside the market was, masked by that headline, if that makes sense.
Yeah, and you're kind of even seeing, the swings are getting beaten down as they have been, but I don't think they reacted quite as bad to SPY dropping, especially some of the lower float stocks or small cap stocks. What do you think we're finally getting to a near bottom? Because even with SPY, when SPY dropped that much, you'd think some of the swings would have dropped a ton, but some of them managed to kind of hold up decently well.
Yeah, exactly. And that's a really good sign. That's kind of where we talked about the whole flag thing, like optimistic but cautious. This just adds to the theme, the thesis. This just adds to the thesis overall that, hey, we still have to be cautious because SPY's kind of like in a limbo right now again. But it's really great to see the relative strength versus the market. And that's something that we really, really love to see. So I think that it's one of those things where it's like, we still need, I think we're close. That's what I'm gonna say. I think we're close. I don't think we're necessarily like, okay, you can buy whatever the hell you want inside the penny stock market and, you'll make money like last year. But I think, opportunities are going to really arise inside the next 5 weeks. And I think that it's going to be like, I think this summer is going to be different than what most of us have traded inside the past, being that I really do think that the summer is going to be hot. And so no hot boy summer this summer if the market's hot, Dano.
Yeah, I'll have to stay indoors. Damn. Yeah, I think I've like I said, with them kind of seeming like they're getting to somewhat of a bottom, I have been starting to accumulate some things, and even if they're not working, and they're not working more as often, I guess I'm kind of getting back to where I can kind of do some plays that I was doing back in November, December, not quite January, February, but I can still kind of get like some decent games on some of these plays. But yeah, it's definitely a relief as opposed to the past few months.
Yeah, exactly. The relative strength that we're seeing is fantastic. That's my most important thing. Is that I know a lot of people care about quote unquote runners and stuff like that. And the runners are important, but I think the relative strength versus the market is really telling. And because obviously the market's not always going to go up. So when we do see something like we saw on Wednesday, where the market really takes like a percent and a half hit, and most of the small caps for the most part are holding up, or at least holding gains, or maybe like a little red. That's a really good sign, because I remember even 2 months ago or a month ago, SPY would be down 1.5%, and it feels like the entire penny market was down 10%. Yeah. So overall, I really think that this is just adding to the thesis.
Yeah, I'm just so ready for this dumb part of the market, like good earnings tank. As opposed to hell, like 4 months ago, you'd get an offering and it'd keep going up. So
yeah. Well, that's the thing is that what we saw for the past really 15 months was that any news was good news. You remember some idiot was calling offerings a good thing, like dilution a good thing, and he was right for a little bit.
Yeah, that's the thing, is like it's such a crazy statement to make, but at the same time, it's like you could buy any dip from an offering, and you can ride it easily you could have at the time wrote it easy for 10% or so.
Exactly. And so now what we're seeing though is that, that saying comes back to it that, all good things must come to an end, and like what goes up must come down, blah, blah. Obviously we saw things that, had really good news run, but then you also had pieces of shit. I go back to it, like BNGO, go to $13 a share. Like, I didn't think that BNGO was worth $1 a share, let alone 13. So, it's kind of one of those things where like, yeah, we're getting close to max pain, but at the same time, you still have some things that are worth, stupid amounts. Now it changes the game because all of these companies did offerings. And so now they're like cash heavy. Like there's penny stocks out there right now who have like $1 billion, $2 billion in cash because they were just dropping offerings knowing that this day would come. And so now they have like, now it's like, what the hell do they do with this thing? Because they make no revenue. They have $2 billion in cash. You know, like what's their real net present value? Like what's their worth? You know, like you have a bunch of cash, but you make no revenue.
What kind of is the difference in a company being scummy doing an offering and the difference in them? This is just a smart move. I mean, if GameStop dropped an offering at 300 or 250, it's a smart move, but it would have been looked at as douchey. Although in that hype, if they would have did it at 250, I think it would have just kept running.
Yeah. No, I mean, based on the volume that it was seeing at that time, it would have just kept going. It would have been eaten up in a day, like any kind of offering. So I think the way that I kind of categorize management, and this comes down to when I'm swinging something, how I feel about the management perception overall and the sentiment is that, you know, it matters who the management is. And also something like if they tell us that a catalyst is coming, or they tell us like, hey, we're presenting news next month. You know, if they say like, oh, we're going to give news next month, and then 2 weeks out from that news, they drop an offering, that's scummy. Like you packed investors in there to drop an offering. Like that's so scummy. That's so pump and dumpy. Like that's so, I can't, I mean, of course it's allowed, but it blows my mind that is allowed. The other thing is like, for instance, like if you have good news, let's call it like a phase 3 trial, and then you instantly drop like a massive offering. I don't want, if your market cap is 300 million, what the hell are you dropping a $300 million offering for? Like that to me, like dropping an offering the size of your market cap is super scummy. So it's like little things like that where you're like, come on, like what are you doing? Like, are you trying to like have, you know, retail investors storm your office? Like that's what you're asking for.
Surprised that doesn't happen.
I'm
as more retail traders get involved, man, just the everyday person, I think you are going to see like emotional people doing things like that.
Yeah. I mean, especially when you're seeing like this stuff, like, you know, I saw a tweet the other day, like, what do you do when it keeps going lower or something? You know, or like, what do you do when like the company promised this and didn't deliver? You know, I mean, same thing like politics. You know, we storm politics. You know, I mean, maybe we'll start storming retail small caps,
investor relations.
Yeah.
The thing is, it's so funny with small caps. Like you picture retail traders like rioting outside of like this huge building, but for small caps, they're probably just going to be rioting outside of a garage.
Yeah, a garage apartment building. You know. Yeah.
But yeah, no, so it should be interesting to see where we go from there. But we got some Q&As.
We do.
Got a lot of them. Hugh tweeted it out. Got a good bit of responses. So I guess we'll just dive right in. Something that we apparently never discuss is some of our favorite long-term holds for an IRA like Amazon and Apple. So I'm assuming they're not asking for the old, you know, the EVFMs or all your sketchy, you know, $1 stocks that you think could go big. But, you know, the blue chips, I guess to start, it just seems like with so many things like overextended right now, it's tough. But at the same time, I do want to add things like more of like Tesla or, I mean, like Amazon after the reverse split if it dips. Shit like that. But
yeah, so I think the first thing that we have to get clear with the retirement accounts is that I'm 22. I have plenty of time to make retirement money. So for anyone that isn't really like savvy in the market, or two, they don't really have time necessarily on your hands, I would say that it needs to be risk adverse. Like risk has to be like risk on constantly. You know, it has to be, your risk reward has to be there. It has to be quality over quantity. And even for me, only about 10% of my portfolio is, I mean, you know, take like my individual Roth. My individual Roth, only about 10 to 15% at any given time is risk on, you know, like let's call it like non-blue chips. So it's really important to understand that, you know, your retirement accounts, listen, there's a max contribution you can only contribute X amount. It is your retirement. Don't fuck around with that. Keep it risk on. Your number one priority has to be capital management and not losing money. So that being said, I have a few retirement accounts, but I'll go over let's call the best diverse one. Number one is I have Amazon at 99999. That is my big brag to when I used to be single and go out, I'd talk about my average share price on Amazon. Yeah, I really picked up
that worked.
Yeah. So I have Amazon, MasterCard, and Visa. And so when I talk about these three, the way that I think of it is just that, listen, the world is moving towards, in my opinion, cashless world, whether that be Bitcoin, whether that be just,
I like those
credit cards
as well, PayPal, Cash App, etc.
Yeah, exactly. So a little bit in there. So those are my three heaviest plays. Amazon, I feel listen, Amazon continues to innovate. They went from selling books to selling everything to now they're in they own Whole Foods. So they're going to continue to innovate.
Do you know the percent of items ordered online that go through Amazon? It's 50% or some shit. It's
That's crazy.
An absurd number. I'm gonna Google it to fact check, but yeah.
Yeah, so I wouldn't be taking my first nibble at 3,000. Maybe if you could average down, but overall, I think Amazon is just I think them and Apple are the future. I think they're going to continue to innovate. And that's kind of how I feel.
In 2020, Amazon's take of dollars U.S. consumers spent on retail purchases online was 25%.
That's incredible.
A shit ton.
Yeah, that's incredible. Yeah, that's what I mean, and that's just doesn't even include the fact that they own Whole Foods. They're trying to get into pharmaceuticals. Bezos went from selling books to selling drugs.
But also, touching back on the Roth though, you said quality over quantity, but
yeah,
would you recommend taking some flyers? Let's say there are some OTCs you may believe in that 2 cents.
I still don't.
But I'm just saying, if it's you put in $200, you get 20,000 shares. If that does go to 50 cents, that's a big win.
Yeah, no, I completely agree. So that's where I come in and listen, if you're 40 and you're not on pace for the retirement that you want, don't take that risk. But if you're 27, let's call it, you got 30 grand inside your retirement account. Take 10% of that. And if you want to be a little risky with that, I have UAVS. I'm still holding UAVS at 60 cents inside my Roth. I have a few others in there that, I'm fine with taking a flyer, even if they go to zero, but all I need is one of them to work. And, UAVS has done that. UAVS, I think I'm up 600% or something, or 1200%. I don't even know. I haven't looked. But so I'm fine with that. But again, it has to come down to if UAVS works, you're not gonna roll that in and start gambling. It has to be 10%, because I really there's been plenty of people that I know that have come to me and said, "Yo, Hugh, I hit my first Roth IRA, small cap, I was all in. This is great. If I can do this 100 more times, I'll have one of the largest Roths." And I'm like, whoa. Do you hear what you're saying? That is you have a better chance of being struck by lightning 3 times. So when I say quality over quantity, I really do mean that. And, it has to be risk on, you have to be a portfolio manager, because if not, it's very quickly to wipe out your retirement. And that's not an account that you want to blow up. You can't blow that one up. That one needs to be unblowable. This isn't hey, let me try a new strategy on my Roth IRA. That I can't stress that enough. I can't stress that enough with the retirement accounts. Let me see.
Yeah, I was gonna read another one for it. Oh, you're reading. You got more in your Roth. You want to talk about?
So I have those 3 UAVS. And then I think it's really good to have, especially if you're not savvy in the market, then I would just choose a target date fund. Like my sister, I have her inside a target date fund. She knows nothing about the market. I don't want to deal with her account. So what do? I put inside a target date fund. That is the easiest, simplest, cleanest way to, not worry about it, but also continue to make a pretty good return. So that's as far as like the Roth goes. If I were you guys, I would choose maybe like 5 sectors that you really like, and then go in there. Like I have some, I'm gonna fuck up this, genonomics. How do you say this? Genonomics?
I don't know what you're talking about.
It's like the genotyping shit. Like those kind of companies. I have those kind of companies. I have like a basket, let's call it, like 5 of the 5 companies that I feel that, can make the biggest impact. Things of that nature, that's fine. But the majority of your retirement account has to be in like, blue chips, your Amazons, your Facebooks, stuff like that. And, if you guys listen to this, then you probably have some sense of market knowledge. Wait on a dip. Like Amazon's down like 12% from its beat. Like they knocked earnings out of the park. They were estimated 9 billion and they hit like 12 billion, something like that. And they're down 12% since. Like this might not be a bad time to take your first nibble inside your retirement account. If it goes sub 3,000, maybe take another nibble. But that's, again, where like it has to be smart. Like, hey, it's time to scale in. Like even though Amazon probably won't go anywhere for the next 10 years, I can't just, say, oh, Hugh said it's down 12%. Let me throw my entire account in.
All right. Well, next we have you ever mistyped a ticker and found something worth trading? I think from Tesla to TLSA, I feel like that one actually sometimes gets volume off of a mistake. I don't know how someone is like, oh, Tesla's $2.35, but that one trades in a range. Sometimes I like to trade it, but that's the only example I can really give.
Yeah, I mean, like you have like ears and eyes, which were going on Wednesday. They can be, like that's kind of like the same thing. Like they have, I don't think they have any correlation except for the fact that they're.
Well, I mean, you didn't mistype eyes and actually spell
No,
ears.
but that's what I mean. Is that like kind of like you were saying with Tesla? Like that's the only thing that I can really think of.
Well, I mean, well with this one, it actually, if Tesla's crazy news, man, sometimes it actually does run with people typing in TLSA instead of TSLA. I swear.
Yeah, that's awesome.
I'm not messing around.
That's a little tidbit for.
So seasons of the overall stock market, usually winter, spring, summer, fall, and fall is also interchangeable with autumn. Yeah.
So this is where it kind of comes into what we were talking about just a little bit earlier about how I do believe that the summer is going to be hot. Usually the summer is when I usually like to take off. I love to travel, so I usually travel a lot, things of that nature. I really try and enjoy myself because the first half of the year usually like wipes me out. So that's usually how I handle the summer. But with what we've seen this year, I mean, we've been through all 4 seasons inside the first 5 months of the year. And I really think that the summer is going to be pretty decent to us. There's always opportunities right now. But I think that as people start to go back to work, that we're going to start to flush out some retail who, we're doing this on the side, and don't really have a passion for it. There's always going to be retail who, and this is what we encourage. There's always going to be retail who, work full time and trade on the side like Kenny Powers. But right now, in the past, like really year, 15 months, we've seen everybody work from home. Try and trade. And I think that part of that's going to go away. And I think that when that does happen, we will see some volume come back. And I think that we could see some really good movement this summer, which it usually contradicts what usually happens. Usually it's kind of like, first 5 months are really hot. And then it's like May walk away or May go away, whatever. And then the summer's pretty slow, and then it picks back up in September. And then October, November are really, really hot. And then December, can be a coin flip either way. I think that's I mean, this year moving forward for the rest of the year, I don't know what to expect. We're going to take it, month by month, week by week, but that's usually how it goes.
All right. Let's go. Define Momo trading versus intraday versus day trading. Momo trading, obviously via momentum, which I guess can also be day trading. And intraday, you're expecting something to happen within a few days. How'd I do?
Yeah, that's perfect. I mean, it's funny because finance is kind of a little bit of like we kind of use a bunch of different words to mean the same thing. Kind of like when you play sports. Yeah, I feel like baseball is kind of similar. So don't get too wrapped up in it, because you can also be a Momo trader who's also a swing trader. And like a Momo trade can turn into a swing trade really easily. So I don't necessarily know that like you have to like really get into the nitty gritty of it. But
all right. How to stay motivated to keep trading during extended drawdowns. What good a trading mentor does. Oh God, this is like 8. Okay, so we'll do the first one. How to stay motivated to keep trading during extended drawdowns.
Yeah. So this is tough. Go ahead.
I was just gonna say, having more cash. I mean, if you're that worried during these extended drawbacks, there's never any issue with having a bunch of cash on hand.
Yeah. So I think one of the biggest things that gets really misconstrued is that, you can turn $3,000 into $1 million and then be fine. What I suggest doing is that you always have a separate income besides trading. So that when you go through these big drawdowns, you're always at least getting some kind of money. So I worked a few jobs in high school and college until I hit like, I had a big enough account to where even if I only made 1%, it would cover my monthly expenses. If you guys know Gary or Mystic Mac, I mean, he worked at the bar until he had like 250 grand to trade with, things of that nature. So I think that the big misconception is that like you have to go full time right away. And that's not what I think you should do. I think that you should always work a side job while you're learning and while you're teaching. Then when you can become consistent, then that's when, and you have like 2 years of expenses inside the bank, then that's when you can go full time, because then you don't necessarily have to worry about it as much. But as far as going through the drawdowns mentally, wanting to trade, I was actually talking about this with a pretty experienced trader recently, and he was having issues being motivated and coming to the desk every day. And the way that I tried to explain to him was like, it's like muscle memory. Okay. If you walk away from the desk for 4, 5, 6, 7 weeks, and you are not inside this game for more than 10 years, then that muscle memory is going to be lost. Even the comfortability of just throwing around, money. We always joke around that we would all, we all don't care about losing like, let's call it 10 grand, but we would never buy a $50 sweatshirt. And so I think that, all right, well, some of us.
You're literally wearing like an $80 hoodie.
Dude, I've had this forever. Like, this is a hand-me-down from my cousin.
Okay.
Yeah, look at this. It's falling apart. Can you see that? But, yeah, this is my favorite sweatshirt. But, so it's one of those things where it's like, you have to get comfortable. Even, if you take that large time off and you haven't been inside trading for like 10 years, it's different when you've worked at a hedge fund for 15 years, because you need that mental break. That's where the whole may go away comes from. But from the other perspective of someone who's, let's call it like 3 years into this game, if you walk away for 7 weeks, that muscle memory is going to be gone, and that, or it'll be on its way out. And so even you throwing in an order for, 10% of your account is going to feel weird. And then it just messes up your center balance. And when your center balance is messed up, that's where shit goes to hell. And then if you come back after 6 or 7 weeks off and you have a red loss, you're going to be kicking yourself. And then if you had 2 red losses, then you're like, shit, why did I even come back? And honestly, most of that will probably be mental. Like you probably lost mentally, or at least that's what I found. So I think the biggest thing is that you have to understand, what you're working towards and how difficult of a game this is. There's some days where we all take a really red day, and it's like, damn it, like this is ass. Like I need another job. And then it's like, hang on a minute. We have one of the best jobs, most freedom out of any other job. There's no ceiling, things of that nature. So I think the biggest thing is to understand what you're working towards, and that, if you are frustrated, cut your starters in a tenth. So if your starter was $1,000, make it $100, and just try and make $40. Just try and make like $40 a week, something like that. Nothing crazy.
Someone asked about scalping and day trading strategies in this type of market with PDT. So if you're under 25K, I would not be day trading in this market.
No, I wouldn't be day trading.
I would be watching,
maybe
finding some bottomed out things.
Yeah, when you're under PDT, it's really tough to. When you're under PDT, it's really tough because you feel like whatever play you take, you have to nail on, and also you're not trying to lose any money. So what I used to do is that I would find something with news from 2 days ago, see if the chart is bottomed out. So I would, let's call it 10 things had news yesterday, and they all went up, crazy high, and then they trickled down, blah, blah. If I would keep them on radar, and if they found support, there were chances that I could take it overnight. And, if it was curling up into the close and shorts were covering, of course, I'm talking about this is 2-3 days after the initial news, plays that are forgotten about. If it was curling into the close, then that's somewhere where I could, take a position overnight, sell it in the morning for like 3, 4, 5% profit. And so I think that, again, under PDT needs to be quality over quantity, and also day trading inside this market is probably not ideal because there are knives after knives. So that's where it comes into the fact of like, hey, it has to be like buying on support, having that tight stop loss is crucial in this market that we're seeing right now with the knives after knives after knives.
All right. This one's for you. My question is, let's say you have a 10 million float with an average of 100K volume. All of a sudden, 2 million volume comes in. How can you use volume to know where price will go for a price target? For instance, maybe 1 daily resistance, 2 or 3, or is it all charts?
Whoa. I'm trying to take this all in.
Insurgence of volume hasn't quite rotated the whole float in the day, but still 20 times bigger volume than usual. How should you use that?
Okay, so chances are it had news. If it has that kind of relative volume, it probably had news. 20 times relative volume doesn't usually just happen. There usually has to be some kind of catalyst, good or bad. So, I don't really think there's necessarily based on volume, there's not really like a way to say, this is where it's going to go and things of that nature. But the one thing that I would say is that, this is where technical analysis and, this is where technical analysis comes into play, where, you can either use the fibs. So, let's call it the 60 Fibonacci, or you could use, relative support and resistance. And where that volume kind of comes in is that if you use a volume shelf, that usually comes into play with where, if you use a volume shelf and, you put the volume shelf overlaying on your chart, that'll usually come into line with support and resistance. So you can say, okay, if you use a volume shelf and at $10, there's 100 million volume shelf, then that it'll probably take 100 million volume to get through that level. So that's kind of where you can kind of, see where that is. And then the other thing that you can use is that you can use historical charts and historical volume. So that, if they didn't dilute anything, but they, but on prior news, they had 10 million shares trade that day and it went up 300%. If it's on pace for that 10 million, you kind of know where it's going to go.
All right. This one, big fundamental analysis one. You talk about buying a stock at the company's cash value. I get the math, maybe. But could you walk through where and how you pull the data? Do you use a screener to kind of sort through these things? And who's your trusted source on data? And they also want you to include an idiom that Dan can correct you on. I don't want you
hang on a
let
second.
the idioms come naturally. But
Yeah. Yeah. So I personally like looking through filings. I know that like a lot of people like BAM SEC, I believe it is. And I think it's BAM SEC or Flash SEC, something like that. And a lot of people like that one. There's also, I believe TrendSpider has that as well. If you're ever looking, like if you're ever like doubting something, just go back to the very last filing, the very last annual or quarterly filing, or even the investor deck. The investor deck will show this as well. And, see how much cash they had, so if they did it last quarter, you can tell that. And then what you do is that you go look at the burn rate. And so if you know that they have 10 million in cash and the burn rate is 2 million a quarter and it's the next quarter, well, you can infer based on the burn rate that they have about 8 million left. That's kind of how I do it. Like I said, is that a lot of people like Flash SEC, and I think it's what is that? Fucking BAM SEC is the other one. So, that's something to keep in mind. But overall, that's a pretty basic thing to see in filings, investor decks, stuff like that.
okay. Scalp. Oh, this one's nice. Scalp survival as a full timer. Assume someone, got some money, but they're having to take out the money, pay their bills and everything. AKA how to best day trade to pay your bills in a choppy market. Some dude responded and said, make as many plasma donations as possible. But
Yeah,
I really
whatever
think
makes
it
the money.
comes to minding your risk, managing that stop loss, and respecting the stop loss too. If you're gonna be scalping for paying your bills, especially if it's you need that money every day, and just man, you can't fucking revenge trade. You can't get in a funk and let
Yeah.
your emotions get the best of you. In that kind of situation, you have to be very, very like focused, and also you just have to mind your rules a lot. Discipline.
Yeah, yeah, definitely. That's again where buying on support, having a tight stop comes into play, and we sound like broken records, I know, but that's really where that comes into play. And then on top of that, what we're seeing right now is that if you miss the support play, like the support, buying on the support, then just don't even play, because something like what was it, LXHD on Wednesday, that thing went up from 630 to 720, and in one candle it was back at 650. If you bought at $7, now you're down 50 cents a share. So if you bought 10,000 shares, that's going to hurt. So if you miss the support it buy, or just in general the support buy, then just be done with it. Don't touch it, because all it takes is one or two knives and you're screwed. The other thing is that if you're last year gave some incredible returns, but it also gave some incredible not real expectations. So if your expectations were to make 10,000 a week last year, change it to $1,000. And take it slow. Cut your starter in half. Kind of feel the market a little bit, and then go from there. You don't need to. This is why living below your means as someone who's self-employed is so important. If you made $1 million last year and instantly you went up to that level of like, I'll never not make $1 million a year, and then this year, you're like up 200,000. Hey, 200,000 is 200,000, but it's not about how much you make; it's about how much you keep. So in this game, it's about living below your means, taking the bumps on the chin, and also realizing that, hey, we have to constantly adapt. So even though I was making 10,000 a week last year, it needs to become $1,000 a week now, or even 500, because that's enough to live on. But until you gain your confidence back and really can understand the market on a deeper level, and kind of like the market that we're in, then it just has to be a survival tactic kind of thing.
All right. Well, how do we use the float of a stock to our advantage? I remember just last episode we explained, or not last episode, but on episode 39 we explained the difference in a micro float, a low float, a nano float, and medium float. So, but what exactly can we use that for? Obviously, comparing it to volume and using relative volume, but we always mention how it's not safe for new guys to play these low float stocks. They can go either way super fast on one big buy or one big sell. But I guess to use it to your advantage is to be aware of the risk that each one could provide. If it's a huge float, it's going to be harder to move. But if it's a low float, it can go down super fast, but it can also go up super fast.
Yeah, if you see, like, for instance, like, if you know different stocks inside a sector, inside a theme, then as one starts to go, you can know that, like, oh, X, Y, and Z has like a 5 mil float. If ABC really starts getting going, this one usually goes on it, and this one has the smallest float, therefore it usually goes the farthest. That's kind of how, like, I would use it to my advantage. Just kind of like, I wouldn't, float isn't like a big deal, but like if I look at something and it's like got a billion float and like a billion market cap, that's like kind of like a red flag, because that usually means that they're pretty dilutative. So that's kind of like a red flag. That's kind of how, like, the other way to use it, but I wouldn't, it's not really like a core metric, I would say.
All right. Are there any key things to watch out for that could indicate a kill candle or a large knife intraday?
Yeah, so this one's important. Sorry, excuse me. This one's important. One of the things is that as it approaches high a day, that's when, your red alerts have to be full on. So again, we're going to sound like a broken record, but as it gets closer to high of day, you got to take some off. Some of the risk has to be taken off, because like we saw with that LXHD or whatever the fuck it was on Wednesday, that thing, its high was 750 or 760, whatever. As it curled, it got to 750 and then knifed super hard, something like that. So, as it gets closer, that's usually when it knifes to the high of the day. So you have to take some off. The other thing is that when you see it, this is why, time and sales are so important, is that if you see a massive order go through, that's a change in the tape. That is somebody's getting out. That's usually when I would take some off as well. So watch the tape. If a massive order goes through, let's call it like I'm talking outlier volume. I'm talking like the stock, like 1 million, 2 million, 3 million share order just goes through the tape. That's when, okay, something's coming, or it's here.
All right. Well, last one. How do we hedge against inflation?
Yeah, so this is more of like a personal preference. Like, I know some people who are like silver. I know some people who are Bitcoin. I mean, I think the best, oh man, this is gonna sound horrible. I think the biggest inflation rejector is just not having all of your money in the bank. I mean, that sounds horrible, but we are a powerhouse of this world. The United States is a powerhouse. Europe is a powerhouse. So if
all of Europe, just all of it,
yeah, fuck it, all of
okay.
it. So I think the best way to fight inflation is not having all of your money inside the bank account. I only keep what I need. And that's because at least it's earning something. Some people say that, inflation's at 3%. Some people say 5%. Some people even go up to 7%, something like that. So I think the best thing to do is, I kind of sprinkle my money around a little bit. Like, I don't have any Bitcoin, but I have some gold. I have a little bit of silver. I have some assets. Last year I didn't have any assets. This year I have, a good amount of assets. So I think that's the best way. I just wouldn't have all your money inside the mattress. I know that a lot of people want like a real strict answer, but unfortunately, for me personally, like I'm not an economist. Economist or economist?
That one's a bitch. Economic,
right? Is it economist?
Economist is probably right, but I don't like to say it. So,
all right, yeah. So, I like there's a lot of people. Like, this is
look. He's trying to say he's not an ecosystem. All right.
Yeah, and there's a lot of different opinions out there. That's why I personally like it's on like a much deeper level of me. So the way that I would handle it is that I wouldn't have all my money inside a bank account, wouldn't have all my money inside a mattress, and personally I would just sprinkle around commodities and things and assets. That's it. Ideally it's not hyperinflation. We become Venezuela and a pound of bread is $1,000. But hey, if it comes to that point, then we'll we got bigger fish to fry than
All right. Well, I think that about settles it for this one. We are heading out to Houston to watch some UFC. And so yeah, I'll see you there.
Yes, sir. I will see you there.
Yeah, that's what I'm saying. I'll see you there.
Dude, I can't wait.
Yeah.
I can't wait.
Yeah, it should be fun.
I can't wait. I'm finally feeling better after like a week and a half of being sick. I'm really stoked for this. Watch out, Houston. Watch out.
All right, man. Well, we will see everyone next time, and make sure you enjoy your weekend, whatever the hell's going on. See ya.